Hi, everyone. This is Arry Yu, chair of the Cascadia Blockchain Council and also co-chair of the U.S. Blockchain Coalition, and your host for Windshield Time. We have this really great interview with Travis Kling, the CIO, Chief Investment Officer of Ikigai Asset Management. Spent some time with him talking about life after post FTX and that whole downfall. We talked about what it means to push this technology, distributed ledger technology and Bitcoin-based technologies forward. And, what are the questions that you need to ask on whether a technology or this project should exist. We talked about things being on-chain and self-custody and a whole bunch of other topics. I hope you'll enjoy it as much as I did. I always love talking to Travis and a big believer in his talent and what he brings to the world. So I hope you enjoy it. Let me know if you have any questions or any requests or suggestions, and together we rise. Thank you. All right. Well, thank you so much, Travis Kling, for joining us and spending some time with us today. I know a lot of folks have heard of you, but a lot of folks don't know you exactly. So could you give us like a introduction to yourself? How did you get into this space? What's going on now?
Sure. Travis Kling, founder and chief investment officer of Ikigai Asset Management. We're a crypto-focused investment fund. We've been operating for about 5 years. Before getting into crypto, I spent a decade in traditional finance. In the kind of area of energy investing, mostly oil and gas, some power and alternatives. And most recently, before crypto, was a portfolio manager at Point72, doing long short energy and materials equities. Fell down the proverbial crypto rabbit hole in the summer of 2017 and convinced myself that all this stuff was going to be a big deal, and left Point72 December 2017 to pursue crypto full time, and have been working on Ikigai ever since.
Awesome. Well, thank you so much for your time. Also as a disclaimer and side note, my husband and I are investors in your fund. So we wholeheartedly voted for you back then. We still vote for you today. We're big fans of your work and just your very, very, very special talent in the space. And so I hope we get to share a lot of that with the folks here in the community today.
I appreciate that. I'm a big fan of you guys too. So, and
we
at this point we've been friends for a long time. So,
yeah, it seems like years and years. It has been years.
Yeah.
So I guess maybe to just kind of like break the ice and like pull the elephant out of the room, like post FTX and all of that downfall. How are you and where are you today? And then I want to also ask, like, do you think that it's an amazing, stellar past experience in TradFi. Do you think that kind of colored your expectations a little bit as you came into crypto, expecting that sort of same professionalism when you were dealing with folks?
And that's a good question. Yeah. So just to give a little bit of context on that, Ikigai had a very large majority of our total assets under management on FTX at the time of the collapse. We had been doing the large majority of our trading activities on FTX for about the prior 2 years. And, never in my wildest dreams could have imagined that the walls would have come crashing down on FTX as quickly as they did. We're now stuck in the bankruptcy process alongside everybody else. We're the 18th largest claim in the FTX bankruptcy process. So have been paying, pretty close attention to that whole ordeal that's been unfolding over the last few months. I would say the plan for Ikigai is still up in the air right now about whether or not we're going to continue operating as an investment business or look to wind down the fund and move the claim into a trust and then, go do something else. I'd say that's all still up in the air. Yeah, there's a lot of moving pieces right now in the crypto industry as a whole. So, I would say the entire ecosystem is on pretty, unsure footing at the moment. And that's true for Ikigai as well. To answer your second question, yeah, very early on when I jumped into crypto full time, it became immediately apparent to me that this was very different than traditional. And I think that certainly the truth of that, bore itself out over the years that followed. But very immediately, I started paying a lot of attention to crypto prices in late 2017, started, actively trading my own money, some in 2017, but even more focused on it in 2018. And I had, immediately I was like, okay, these things do not move like stocks. They, the volatility and just the kind of, the manner in which price discovery occurs in crypto is just, it's not really anything much like traditional asset classes. Although I will say that over the last couple of years, Bitcoin, has at least directionally moved towards acting more like a traditional asset, certainly with a lot more realized volatility than, almost all traditional assets. But, macro has become an increasingly larger driver of the crypto market as a whole over the last couple of years. I don't think that that's going to decline anytime soon. But no, right out of the gate, this was a totally different animal, and then the cast of characters that you start to meet in the crypto ecosystem, it's pretty apparent right out of the gate that this is just a different kind of folk as well too than relative to folks that I was used to meeting when I was in equities investing. So yeah, it's a pretty different beast.
You mentioned that you're still considering whether or not and what move you do next post 2023 maybe, or in 2023. For those that have survived more than one crypto winter, are you thinking about maybe like if you survive or just stay alive during this crypto winter, the next up run, and there's usually an up run, so like if that up run is in 2024 or 2025, a lot of things could change by then, and regulatory wise, macro wise, and the opportunity will be big back at that point. Does that excite you at all, or?
Yeah, it does. Yeah, I'm pretty highly convicted that all this stuff is going to be worth more in the future than it is today. I think that's quite likely. And if I were to stick around and continue to manage other people's money in the crypto ecosystem, I'm pretty confident I could generate attractive performance, and the way the compensation works in the hedge fund industry, that means that, I would put some dollars in my pocket for doing that. But that is not my primary priority right now, as I think about my involvement in crypto, because I am quite concerned about whether or not this technology is going to fulfill its potential to make the world a better place. I've been focused on that for years in this space. I mean, it was the major driver for why I got into this was that I saw the potential for a different path relative to the sort of status quo way things were being done in the real world, so to speak. And this is a revolutionary technology, and before Bitcoin came along, the world had never really had anything else comparable to Bitcoin. And a bunch of the other projects and experimentation that's going on in the space. I highly believe in the potential of this technology to make the world a better place, but that potential is not set in stone. It remains to be seen whether or not this technology is going to deliver on all of, some of, or none of its potential to make the world a better place. And in my opinion, if you're being honest with yourself about what the crypto ecosystem has done in its entirety over its history, I do think that as we sit here in March of 2023, it is mostly just potential. Because there has definitely been good that's been done through crypto, but there's been a lot of damage that's been done through crypto, and there's been a lot of bad actors and bad actions that have been enabled by crypto. And and this is just my opinion, but I think if you look at the totality of the good that's been done and sort of back out the bad that's been done, the net of that, to me, strikes me as probably marginally positive. But you could argue, that point. But all of that to say, it's like, we're 13 years on into this Bitcoin experiment. All this stuff is worth $1 trillion. There's, somewhere around, maybe 150 million to 200 million people on planet Earth that have touched crypto in some capacity. There's tens of thousands, maybe a couple 100,000 people that are working in this industry full time. But all of that, as we sit here in March of 2023, I think is really just potential at this point. And when I look back at the damage that has been done in crypto over the last year, it makes me worried about the future of this ecosystem and the future of this technology. The crypto ecosystem has a large attack vector from intelligent sociopaths. And intelligent sociopaths seem to be attracted to this space like a moth to a flame. And I don't think the community, I don't think we're being honest with ourselves about how much damage has been done or the size of that attack vector. We're certainly not acting, in my view, in a manner that is commensurate with an acknowledgement of the size of that attack vector and the risk that is present to you fast forward 5 years, 10 years from now, and all this stuff is worth a lot more, but the technology still isn't, making the world a demonstrably better place, in a meaningful way. And that would be a terrible outcome in my view. And I was feeling all of these things before the FTX collapse. But I think the soul searching that I've done over the last few months has brought that issue acutely into focus for me. And it is if I'm going to stay in crypto, which I think I'm going to in some capacity, my highest priority is to figure out how I can best contribute to trying to push this technology towards its potential to make the world a better place. And that may be through managing money for other people, or it may not be. It may be in some other capacity. And that's undecided right now. But that is the highest priority for me right now, because it is such a great concern of mine.
You mentioned technology quite a few times, that it's life-changing. It has the just so much opportunity. How about we double click on that? What do you mean by technology? Because I fear that, and I think there might be an opportunity to clarify a little bit right there. Like, what do you mean by this technology? What is this technology?
Yeah. Yeah. I was referring specifically to just, I'd say blockchain technology, distributed ledger technology, and crypto assets. And I talk about those two things together because there are private permissioned blockchains. Those are not particularly interesting to me, because I think they're just sort of perpetuating the issues that are already in place with the status quo. So, and for a public permissioned blockchain, in my view, you need a crypto asset associated with that to act as an incentive mechanism for the blockchain to work in a permissionless, trustless manner. And maybe taking a step back a little bit and then drilling down a little bit further. And it's worth mentioning, I was not a technology investor before coming to crypto, and really wasn't much of a tech guy. I didn't care deeply about technology. I wasn't fascinated, particularly with technology. Computers to me were always just, sort of a tool or kind of a fun thing that you can do different things on. I didn't spend a lot of time thinking deeply about, for example, the intersection of technological innovation and the advancement of the human species. But now that I've been doing this for full time for 5 years, I am a technology investor, and I have been thinking very deeply about these things and researching, tangential aspects to this a lot more. And it looks, blindingly apparent to me that right now, humanity is set to become rapidly more intertwined with technology, and that we're just going to be handing over more and more of our lives to technology. That's already been happening. It looks like it's accelerating. We're going to spend more and more times existing digitally, less and less time existing in analog. And I don't think there's much of anything we can do about that. That's an inexorable just path. We're heading down that track. And then when I go back to the potential of blockchain technology, I kind of bucket it into two different categories. And the first category is money, crypto as money, and Bitcoin is far and away the leader in that use case. I don't think there's really any other crypto asset that can make a claim to be money. I think stable coins, maybe we could put those off to the side for a second, because they are money as well too, but they're, it's a digital representation of a fiat currency. But Bitcoin is, something very different, right? And, when I look at the state of monetary and fiscal policies globally, they look like they're on an unsustainable path, and that eventually these chickens come home to roost. I like to say that we're in the midst of the largest monetary experiment in human history. That's not hyperbole. That's unequivocal fact. Quantitative easing while simultaneously running increasingly larger deficits on top of increasingly untenable debt levels. We've been doing this for a while. It's the sort of longer term path it's getting worse. And if monetary history, which I know reasonably well, the history of currencies, the history of fiat money, the history of debt, the history of world reserve currencies, there's histories to all these things. Humans have been doing this stuff for about 5,000 years. And if you look back in history, this experiment we're running right now, it's really only ever ended in one way, which was collapse. And I don't know the timing of that or the exact steps, what the lead up is going to look like. I don't think it's knocking on the door right now. I don't think that's this decade's business, but the path looks quite frightening to me. And Bitcoin, to me, strikes me as the most viable alternative. And that you basically take, the current set of things, which is, essentially Jerome Powell decides how money is going to work on planet Earth.
Mm-hmm.
And Jerome Powell decides the price of every asset on planet Earth and decides the approximate pace of economic growth of every country on planet Earth. And that's really not hyperbole. That is really how that works, because he sets the interest rate for U.S. Treasuries. U.S. Treasuries set the interest rate for every other debt instrument on planet Earth, and then every other asset's price is really just, some function of the price of debt or the price of money, so to speak. And that's the way we have been doing things. That looks untenable to me. And you switch that out for, money being operated with open source software code. And that's a very different thing. That is a very, very different thing. But I think that it is the best alternative that I see anywhere. And I can easily imagine a world that is much better off, where the sort of foundation of the financial system is this, crypto asset that's associated with the trustless blockchain that runs on open source software code. So I think that's a fight worth fighting. And then there's kind of the other use cases, which the way I kind of characterize these is humanity is set to become increasingly more intertwined with technology. Mm-hmm. And when I look at the state of things currently, there's a lot of centralization in technology in the world today. The largest, small handful of technology companies in the world wield, an unbelievable amount of influence in our lives. I think that centralization is causing abuses of power, and those abuses of power are leading to societal problems. Mm-hmm. And the easiest example of that is here in America. I think the country is the most divided that it's been since the civil rights movement. And there's a few different reasons for that. But in my view, the number one reason, the largest reason for that, is that social media creates echo chambers. That the algorithms that govern social media inherently drive divisiveness and create echo chambers, which then drive more divisiveness into this kind of negative spiral. And that has us in a situation today where, it feels like people are kind of forced to be divided into two camps, and it's really causing a lot of divisiveness in America. And when you maybe you can argue about whether or not you think that's the case. I think that's the case, but maybe you can argue about that. But if you look at that, and then you couple that with this trajectory of humanity becoming increasingly more intertwined with technology, that looks like a setup for even bigger problems, even bigger, more damaging abuses of power from centralized technology companies. And I think ChatGPT is a great example of that. It's right in our face right now. It's making headlines every day, and you can just kind of look at that thing and then run that out 5 years, 10 years, 20 years from now, and just imagine, a centralized technology company that starts to, impose its own, set of profit-driven motivations around a technology like that, and that knocking on to causing even more problems in society. And so with the other use cases outside of money, layer one smart contract platforms, distributed compute, that sort of thing, I think that has the potential, and I highlight that word potential, to alleviate those problems, to have technology that is built on decentralized networks that are not encompassed in this, corporate profit-driven incentive structure like we find ourselves today. So those are the two buckets that I think about those in. And I think the money is a fight worth fighting. And I think just sort of like decentralized compute, decentralized technology type of thing in general, I think that's also a fight worth fighting. It's why I'm not a maximalist, because that second fight, I think, is also absolutely a fight worth fighting.
You said so much in that I'd love to just go in and comment and chat about some of these top points that you bring up. So I come from the technology side, 22 years and coming in from the tech sector. And originally I started just playing in the world of Ether. I was part of one of those ICOs back in 2017 that did created money out of thin air and built a crypto, and still trading out there in the market. Fast forward to today, 5 years later, and having spent more time digging into the details, my takeaway is this. One, blockchain is really great technology, and yes, it is world changing, but there's only one case that exists today, one use case, and that is Bitcoin. Nothing else is actually blockchain. If you look at the purest definition of blockchain, right? Immutable, public, permissionless, time-stamped, decentralized, and not just decentralized in terms of geographic distribution, but decentralized in terms of power and who can control that network. And you mentioned, permissioned or private distributed ledger technologies. I think everything else that exists today in the space of Web3, metaverse, crypto, digital assets, whatever you want to call it, most of them at best are built on DLT, and most of them are private or permissioned versions of that DLT. They are not decentralized in terms of power and governance. And when I also look at smart contracts today, like when you look at, most of these cryptos are built on smart contracts. NFTs are built on smart contracts. 99% of smart contracts out there have a backdoor, which means it's centralized. It's not necessarily immutable. Somebody can always go in and Control Z, decide to print some more tokens or burn some tokens or reroute it somewhere. And so that's why I have a problem with most other cryptos or anything claiming to be crypto or digital asset or decentralized or blockchain. To me, there's only one blockchain that use case that exists, that's Bitcoin. And then everything else is really at best a centralized startup company. We're all gambling on new startups that don't have product market fit, that don't really understand the ethos of the space, that really don't understand what it means to be decentralized. They're conflating the term decentralized when they really mean geographically distributed, right? Amazon Web Services, all of that cloud infrastructure is maybe air quote decentralized, but it's more just geographically distributed. Yeah, I think those are my only comments on that. I think most crypto companies are startups at best, with well-intentioned, most of them with way too much money, too much egos, not enough governance, not enough reverence to the customer, the people that they're supposed to be serving. And they're really going backwards. They're going butt first. They're going technology first, solutions looking for a problem.
Yep.
And that's why we're having so much actual traction and market penetration on this technology. Yes, this technology has so much potential, but this technology, when I say technology, it's really like blockchain. We should really be focused on Bitcoin. When you're looking at the use cases will only go farther once the regulations catch up, especially here in the United States. And once we have an actual framework that's accepted across lots of different institutions, organizations, countries, counties, states around identity. Like identity is the number one thing that's holding back mass adoption of this crypto asset, digital asset, Web3, DLT space. The unlocking of the blockchain-based new digitally native future is all based on identity, and we haven't figured out identity. We're figuring out all the other things, but until we figure out identity, then the enterprise use cases unlock, the government use cases unlock, the digital voting and the licenses and the property rights, that all unlocks. And if we can build out that infrastructure, I just finished reading the book. Sorry, I'm going on a little bit of a rant. I just finished reading the book by Hernando de Soto, Mystery of Capital. I mean, if you want to unlock capitalism for the rest of the world and really help humanity with property rights and licensing and titles in the rest of the world, they can actually leverage this technology that's built here in the Western side. And we can actually help them accelerate with these representations, digitally native representations of the property and the titles and the things that they think they should own, and figuring out that process. But they don't have access to that technology, they don't have access to that infrastructure, and that's why like there's so much of a divide between like how advanced the United States is compared to, I don't know, Zimbabwe or Bangladesh, those property rights and those virtual representations that they don't have the infrastructure to handle. And that's where DLT and this future is really, really so important, but identity is really the big part of unlocking all of that.
Yeah. Yeah, there's very little that I would push back on there. One of the, I had these 4 questions that this is like a framework I came up with probably like 4 years ago that has actually stood the test of time surprisingly well in an industry that is in such a constant state of flux. And it's, how ready is the tech for the world? How ready is the world for the tech? What do you need decentralization for? And how decentralized is decentralized enough? And that's a framework that I like a lot. And when you evaluate these different use cases, you know, I think for the folks listening to this that know, you know, a good amount about crypto, they know that those 4 questions cut to the heart of, you know, it's like you can spend a long time on sort of discussing those 4 questions for any given use case. And it's not like we've got answers to all of them at all, but, you know, I think this idea of how decentralized, what do you need decentralization for and how decentralized is decentralized enough? This is an ongoing experiment in crypto that we don't have a good answer for. We just do not know. And it does make sense to me that if you're talking about, you know, this term that sovereign grade censorship resistance is a term that gets thrown around a lot, right? For Bitcoin, where it's like a government cannot shut this thing down, even if they wanted to. And Bitcoin, in my view, you know, is that, and has achieved that. Now, if the government went as hard as they possibly could at Bitcoin, they could send the price of Bitcoin to, you know, sub $1,000. If they just went, you know, outlawed everything, throwing people in jail for owning Bitcoin, you know, you could send the price very, very low. I don't think governments could stop the Bitcoin blockchain from producing blocks. Right. And so that is, you know, I guess in a way, sovereign grade censorship resistance, sort of in a way. But then when you, and so if you're trying to be a world reserve currency, or you're trying to, you know, you're trying to compete against the dollar or against gold, or you're trying to be the collateral foundation for the global financial system, and you're competing against US treasuries, having that level of decentralization that leads to that magnitude of censorship resistance, that does make sense to me. I don't think you need that level of decentralization for every use case.
Right, exactly.
And yeah, and so you have this exploration of what do you need decentralization for, and how decentralized is decentralized enough.
Right.
And there is a, you know, don't get me wrong, I've over the last couple months been doing soul searching on this, because it would, in some ways, as I am thinking about what I want my involvement in crypto to be, the Bitcoin story, it is cleaner than all the other stories. It is the value accrual properties of Bitcoin, I think, are better understood and proven out than any other crypto asset. In some ways, it would be easier for me to move forward in this space as a Bitcoin maximalist and just a sort of proponent for Bitcoin only. But the sort of like AI fears, technology eating humanity fears, those are such big fears for me. That could happen before the dollar collapses.
Yeah.
It really could.
Yeah.
And I don't see anything else on the horizon, like crypto assets and decentralization. It's the only thing I see on the horizon that even has the potential to try and put up a fight against the societal problems that are happening and set to be exacerbated in the coming years and decades as we become more intertwined with humanity. So I do think that it's a fight worth fighting. There's a lot of hair on it. There's a lot more uncertainty. The value accrual mechanisms are not as clear. It opens the door to so much more scams and scammers and rug pulls and frauds and vaporware and bullshit. And like, I get it, right? As soon as you step away from Bitcoin into altcoin land, it just gets, a lot messier, a lot faster. But that's still not a sufficient reason enough to me to throw your hands up at the whole thing. Now, do I wish there was some way to like temper the magnitude of speculation that is present in the crypto markets as a whole, Bitcoin included, but certainly in the alt market, undoubtedly, yeah. No, I definitely think that I wish that was the case. I'm not entirely sure how you go about that. Like, you can't just wake up every morning and wish that people would speculate less on vaporware. Like, right. That's not an effective tactic. And you can go around and just yell at the top of your lungs that all this shit is vaporware. But, I think you've got a body of evidence that tells you that people are going to speculate heavily on this stuff. Yeah. And there's this term called financial nihilism. You ever heard this term before?
Yeah, financial nihilism.
No, financial nihilism is this. I heard it on the Hidden Forces podcast. I don't know if Dimitri Kofinas invented it or if that was just the first time. I think maybe he had a guest on that. But like the concept of financial nihilism is basically like the wealth inequality is widening so badly, right. And the sort of 1% are taking so much more than they ever have before. It looks like that's probably set to continue. It's sort of, if you look at like hourly or sort of like average median income relative to or sort of median income relative to median home price in America, that's like the worst that it's ever been, right? Millennials have like a massively lower net worth at our current age relative to prior generations. All of the statistics around like, millennials and Gen Z, this is the first time that when you poll people this age, that the expectation is they'll be worse off than their parents, right? That's never happened in American history before. And that setup leads to this YOLO attitude that it's like, look, I have got to try and get access to some home runs because my situation is I'm never going to be able to buy a home unless Dogecoin goes to $1 or whatever, right? And so it just leads to this speculation. And then you couple that with like, look, sports gambling is it's never been more popular than it is right now. You look at, unprofitable tech stocks, and the run and subsequent collapse that they had. But, I just think I don't think it's reasonable to sort of like expect there to not be a lot of speculation on, essentially vaporware and crypto. It's just going to be part of this. And, education can help help that somewhat. If you just scream at the top of your lungs constantly, you will lose all of your money in the large majority of this stuff. Much more than 99% of these projects, 99.9 something percent of these things are not going to achieve their potential, or their sort of dream, or vision.
Yeah.
So you can do things, but I think the hope is, the hope is that out of all of that speculation and tons of, an unbelievably high failure rate, that if you can get a couple things, that might be all we need. We may only need one or a couple smart contract platforms to gain really broad adoption, to act as a forcing function on centralized technology companies to, stop acting so shitty, for example. And so, I'm hopeful in that outcome. And I think the last thing, two other things, just in response to what you mentioned.
Yeah.
It is, first thing I'll say is I completely agree that self-sovereign ID is a huge thing. Decentralized identity, on chain identity, whatever term you want to use that. I completely agree. It's very important. And then in some ways, working on a lot of these things that crypto is working on is kind of putting the cart before the horse, because we don't have that part figured out.
Right.
And then a lot of this shit just isn't going to work that well if you don't have, a functioning self-sovereign ID system in place. And guys are working on that. There are projects that are working on that. Seems like it's a pretty hard problem. Like a lot of these problems, seems like a pretty hard problem. But I'm certainly hopeful about what this ecosystem will produce over the coming years, and would love to be a champion for those projects as they start to get further down the pipe and come more fully into fruition. And then I'll just say that the crypto ecosystem has done this thing where they've taken decentralized projects, Bitcoin being the most decentralized. ETH is less decentralized, but still somewhat decentralized, and maybe some other ones are also somewhat decentralized, and some of them are maybe not so decentralized at all. But there's a spectrum of decentralization. But there's a decentralization ethos, at least, and is present to varying degrees in this ecosystem.
Right.
But then we took, then we stuck a bunch of trusted middlemen into everywhere in this ecosystem. And then the problems have really come from the trusted middlemen. And FTX is, the prime example of that, where, nothing happened to the Bitcoin blockchain in November of 2022. It kept doing the exact same thing it's been doing since January 2009. But you had this behemoth trusted middleman that ended up being fraudulent, that then caused a massive problem. And that's true for Celsius, and that's true for BlockFi, and that's true for Genesis and Gemini, and there's an irony that we continue to shoot ourselves in the foot with this bullet that we're sort of supposed to be railing against. And why is that even present? And it's present because a trustless user experience in crypto is so bad that it's just not a viable option for people. And ecosystem participants are just willing to roll the dice and make a trade-off. And different people are careful to varying degrees. I thought we were being very careful, and we had avoided a lot of the landmines that a lot of other people had gotten caught up with. And so, but then eventually, sort of trusted middlemen can get to a systemic scale. And then from time to time, those have, either some kind of problem with them or a major problem with them that causes a collapse that then does a ton of damage to the space and sets the space back a lot. And the path forward there, which is also something I've been thinking about, to me, I think there's probably three options to that path. You can either go fully on chain, you can go fully trustless, just eliminate all trusted middlemen, and everybody is doing self-custody and trading on dexes, and you just refuse to allow any trusted middlemen to have, sort of, be in a position to cause systemic levels of damage.
Yeah.
You can allow trusted middlemen to exist and you can regulate them, or you can do self-regulation and we can, allow trusted middlemen to exist, but regulate them as an ecosystem. I think option one is a non-starter right now. I don't think it's ready. The tech's not ready for the world's not ready for the tech. And maybe that'll be different 5 years from now, but that's the state of things right now. With the second option, with regulation, well, it's coming whether you want it or not. That's very apparent over the last couple months. And we can have a conversation about how helpful that regulation is going to end up being to the crypto ecosystem. But we made such a mess of things last year that it is now coming, and it's coming, in force. And we're now going to be dealing with that. And I certainly lean libertarian. So it is in no way my nature to say, hey, government, come regulate something that I care about. That's just not in my nature to say that. But when I look at what we have been doing, is ineffective self-regulation. We've been trusting middlemen and then ineffectively regulating them ourselves. And there's no particular reason in March of 2023 to look at the state of things and say, oh, we're going to be able to snap our fingers and magically effectively self-regulate going forward. I just don't think that's reasonable. And so in my view, you need regulation from governments. You'd like it if it was helpful and not unhelpful or damaging to the point of destroying the value proposition of the technology as a whole. TBD on what we're going to get there. And I think you need that coupled with changes in self-regulation. And self-regulation in crypto is really just a social construct because of the way that this ecosystem is built. It just exists in Telegram chats and on Twitter and on podcasts and at conferences and in meetups and on TV appearances, or that is where self-regulation exists. It's a social construct. And we have to decide as an ecosystem to do things differently than we have been doing them, and I think that's the path forward. And it is going to require leadership. And leadership in crypto is like sort of this weird thing. It hasn't been, certainly hasn't been wildly effective. You might argue it just has been straight up ineffective. But I think what we do know for sure is that if you rewound a year ago, a lot of the names that you would put in this sort of leadership, on the top of the leaderboard of the quote unquote crypto leadership, most or all of those names have gotten themselves in a lot of trouble. Some of them are going to go to jail. A number of them, their projects or their companies collapsed, right? Like there is a leadership vacuum that exists in this ecosystem right now. And I don't think, in my view, we have been doing particularly well with leadership. I don't think there's been because decentralization is in the ethos of this ecosystem. It seems like communication and coordination amongst a smaller group of individuals to try and establish something that looks like the social construct of self-regulation, it hasn't been done very effectively. And I think part of it is because people are trying to not be a group of people behind closed doors implementing their closed door will on a whole ecosystem. And I get that. I 100% get that. But I think you got to do in the hindsight, you know, in the aftermath of what's happened over the last year, I think you have to look at that and you got to go, well, I think we got to do something different than we have been doing.
Yep.
Yeah.
Same thing over and over, expecting different results. We got to change path and we got to reorganize and collaborate. Sort of how I built the US Blockchain Coalition. We're like the NBA. We have 42 states that are involved, and the coalition is just literally organizing, coordinating, but you run yourselves. And I think we need something like that in this Web3, crypto, digital asset, Bitcoin, NFT space, some sort of NBA player that'll bring all the interested parties together, not dictate, maybe just Queen Mary, help coordinate resources and information, talking points. And maybe we can all just run on shared values. Like I'm interfacing regularly with folks in Kentucky and Kansas and, you know, here in Washington State, we're like, what? But no, I love these guys in Kansas and Kentucky and Texas. Like we have so much more in common as humans, right?
Yeah. And part of what makes that challenging is that this is a global asset class.
Yeah.
And a global technology. And in a lot of cases, there's language barrier, right? I mean, this stuff is big in Asia. You can, you know, maybe it's bigger in Asia than it is here. And it spans time zones. You know, I've got small private Telegram chats, you know, and it's like there's like 40 people in a Telegram chat, and there's some amount of message flow that happens 24 hours a day because you're just moving across the globe of time zones, right? And it can be hard to, you know, route, and there can be deeply different value sets that are in place across different cultures. And you just have to accept that. And like you know, it's the concept of scams, like the cultural relationship that China has with scams relative to America and scams, it's very different. It is. It's just, it's not this, there's not the same, you know, it's like it's just part of the pyramid schemes are just part of Chinese culture. Right. And so this idea that like, oh, I'm going to throw some money into something and, you know, oh, I got rugged. Like, it just is like, that's just more widely accepted into their culture. And, you know, pick up any book, any business book about Chinese business culture, and it will tell you that there's a different set of values, for example. And I'm not trying to pick on China at all. I'm just saying it, you know, and that can make it harder to do some of this shared value coordination type of thing. But I think there's got to be a more concerted effort relative to what we have been doing. Yeah,
I totally agree. Well, I mean, I could go on and on forever. It's been really good talking to you and seeing you. Very emotive. I like the emotive, Travis. So it's good seeing that. I guess what's top of mind for you for the next 30 days? Just bring it like really short term, and what should we and how?
Yeah, I think you can probably just like drag that out to the rest of calendar year 2023. You know, I think. You know, I think there's a pretty good chance that 2023 is going to be basically a wash for crypto. And that we're going to be dealing with the knock-on effects from the aftermath of the damage that was done in 2022, and that's just going to stretch throughout most of this year. And we're going to be dealing with these regulatory actions. Those are not done. You're going to start on these, you know, all these regulatory enforcement actions. You know, you're beginning all these different timelines and paths that have different major events along the way. And, you know, the space is going to be shaped by these over not just this year, but over years into the future. But some of this stuff is just, it's like, it's very apparent that the dust has not settled from 2022 yet. And it's not going to be settled a month from now or 2 months from now. You know, and I think 2023 is probably going to be a bit of like a soul searching year for crypto. And I think that's mirrored for us at Ikigai. Like I said, we're not exactly sure how we, it's like our bank was Silvergate, right? Like we don't even can't even really use, it's like we can't even hold any cash at our bank in our bank account right now. So it's like this, it's quite messy at the moment. We're feeling it, but everybody in the ecosystem is feeling it. You're seeing headlines every day about, the banking industry pulling back from crypto, and there's all kinds of concerns about counterparties and like, who knows what's going to happen with Binance. And, there's still a lot of moving pieces. And, at some point this too shall pass. I am confident of that. And, if anything, those of us that are not leaving and dedicated to this ecosystem, I think 2023 should be used as a year to regroup and to look inwardly and outwardly honestly about, what do I as an individual need to do differently? The organization that I'm a part of, what does that need to do differently? The ecosystem, what does that need to do differently? And what can I do about it? And I hope everybody's doing that. Because you keep the definition of insanity is doing the same thing and expecting different results. And FTX and Mt. Gox were not exactly the same, but they had a lot of the same similarities. And Mt. Gox was a decade ago. So we shot ourselves in the foot with the same bullet that we shot ourselves with a decade ago. And if you fast forward a decade from now and we're shooting ourselves in the foot with the same bullet, that's just going to be unbelievably disappointing. And it is my priority to try and keep that from happening. So I mean, look, the macro stuff we didn't touch on macro at all. The macro stuff, inflation is stickier than what people were thinking. The jobs market has remained red hot. It's forcing the Fed to reevaluate how high they're going to go with their, how high they're going to raise rates to the terminal rate, and then, how long they're going to keep it there. And macro is sort of, readjusting expectations to that. I still think inflation is going to come down hard through Q2 and Q3. And I think it's going to boil down to, how smooth is the glide path through Q2 and Q3 with inflation. If you're just getting these really clean month over month declines, and you could get to the end of the summer, into the fall, and you could be at sub 3% inflation, there's a path for that. And I think that would be pretty supportive for risk on type of environment, tech stocks. I'm kind of generally of the view that the best way to think about the macro environment for crypto is to just think about the NASDAQ. So I reference the NASDAQ a lot. I think that would be a backdrop that would be pretty supportive for the NASDAQ. But, if it's a bumpier ride over the next, 6+ months, and then, if you get down to 3.5%, and then we're like sticky inflation there. And, the terminal rate's at like 6% and inflation is like stuck at 3.25. And now the jobs market, which literally couldn't really be any stronger than it is right now. It's like employment's at all-time lows and job openings are still very, very high. And, wage growth is still present. It's certainly not declining, although it has cooled some. But it's like, if you've got 6% Fed funds, 3.5% sticky inflation, and the labor market is, weakening somewhat, the economy is weakening somewhat, I think that the Fed ends up being in this standoff where you're just waiting for the weight of that 6% interest rate to just keep pushing down on the economy, keep weakening the labor market, to have that eventually roll through to bring inflation down to the Fed's 2% mandate. That standoff scenario, I do not think would be particularly attractive for tech stocks. And I think that that's going to be, in my view, over the rest of this year, that's the way to kind of goalpost probably what's going to happen. You know, there's, you know, idiosyncratic risks that could certainly, you know, rear their head at any time. But that's how I'm kind of thinking about the macro trajectory over the course of this year.
I find a lot of investors are just going to cash and holding it and putting it into like different accounts. Like I think Robinhood
Dude,
is
the 2-year treasury is giving you 5% right now.
yeah, 3%, 4%, 5% easy everywhere. So a lot of people are just
Yeah.
moving cash and hanging out, which I
Yeah.
was like, oh, interesting. Yeah.
Yeah.
Cool. Help us to get in touch with you. If anyone wants to get in touch with you.
Yeah, Twitter's always good. Travis_Kling. Yeah, Twitter's probably best. Our website is ikigai.fund, ikigai.fund. We've got a content depot that it's linked on that website. I write a monthly update letter that goes out the first of every month. I've been writing that for 4.5 years. It goes out to about 6,000 people. People like it a lot. They're meaty, they're long. But you can read past monthly update letters there and sign up for future ones there. And yeah, thanks for the time. All right, appreciate it.
Yeah, likewise. Let me know if there's anything I can do to help.
I appreciate it. Thank you.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets for busy parents and working folks who are curious about these new technologies. Day, Arry, and their guests talk about these evolutionary systems of money and what they do, y'all. Because what part of your life does money not touch? This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again and enjoy the show.
Stuck inside.